Good afternoon, all. CamelbackTrading.org coming to you this Tuesday afternoon, June 28th. We are looking at Window Trader's market profile of SPY, IWM, and triple Qs. One thing for the market to consolidate, which I said would be healthy. Another thing to do what they did today. Look, we'll go over it when we look at the chart, the daily chart. It just puts it in a nutshell how the markets trade these days, especially when you're dealing with short-term, emotional traders, uneducated traders, and algorithmic trading. When we go over the daily, I'll show you. Today was another example of irrational movement when we spiked in A. Now, again, we took out yesterday's high. ES got above the 20-day moving average. Okay, I could see the market wanting to trade higher, but I told the room, I'm not sure what's going on. I'm going to stay away from it. I mean, the way we ripped in A period was absolutely absurd considering what we did the rest of the day, right? We moved $3.02 from the days from A's low to the A's high, which was utterly incredible, only to not only give that all back, but to take back all of yesterday and take back Friday's low, get into the gap. We held the gap, but it's a 3-day balance, but basically today is the whole balance, right? We have an outside day down. That's pretty bearish. Russell outside day down. Now, triple Qs never took out yesterday's high, so they didn't have an outside day down, but we've all come into balance on the daily. Qs not only filled the gap, they got into the 23rds range. So you can even encompass them into a 4-day balance, including that day's range. I had to leave early for an appointment. Had a good day. I'm a little upset, didn't take advantage, especially later in the day, which I'll go over in a minute, in I and J period. So when the day opened and started going higher, I didn't chase it, but any little pullback in A, I was getting long. I bought 390 calls 3 times in A period, and I got paid on all of them. Then in B period, it turned out to be the opposite. Once we took out A's low, any kind of push up or anything like that, I was taking shorts, 392 puts. C period, we went trend. I started taking 390 puts and did that 3 times. So I scalped 3 longs in A, 2 shorts in B, 3 shorts in B, and then when we got down in C period, I did 3 shorts. When we got down to value low from yesterday, and again, you can't tell on here, I'm in 20-tick increments. I took a long the first time, 387 call, which paid. And then I actually took a long in D when we got to the afternoon pullback low from Friday, which the first time got a responsive bounce. And then after that, started short in D period, when with the single prints, with 385 puts. E period, took a long against the lowest accepted price, which was B's low from Friday. Got a responsive bounce off that the first time with the 383 calls. And then after that, F period, just started scalping shorts again, the 387s. So I was on both sides of the market. The longs, A period, was because we were just driving higher, so any pullback I got long. The other longs I took in C, D, and E were against very visual levels from Friday. And then after that, any short, all shorts got paid, obviously throughout the day. The trade I missed, and I pointed it out before it even happened, I said we got 4 wide in H. When I couldn't get 5 wide, I was like, that's a telltale sign that we want to continue to go lower. Now, J head faked a little bit, but they couldn't even get 5 wide. We never got 5 wide, and I never took advantage of that. Because I was still here, I could have absolutely have shorted either I or J, even though that was a little bit of a head fake in J when it took out I's high. But never got 5 wide. That was a telltale sign they wanted to attempt to push lower. And we did. So that was a miss I was a little upset about. We go out with a triple distribution day. 5 sets of single prints. Now let's put that in perspective. We had some huge gaps on the way down after we broke out of that 8-day balance. We didn't hold a single trend day down. Today, all we did is come into balance on the daily, and we have 5 sets of single prints. Emotional trading. It's amazing. Russell goes out with a double distribution day. They only have one set of single prints in D. Triple Qs go out with a triple distribution day also. They held J singles, and they have 4 sets of single prints up here like we do. As far as destinations for tomorrow, for the upside, boy, there are a lot of them now. I'll use K's low as the price probe, 370.71, and then have 5 sets of single prints. First one started 382.01, get filled at 382.53. Second set started 385.05, get filled at 385.76. Third set started 386.26, get filled at 387.71. That's one of our largest sets. Then we have 389.01 to 40. That's the B's low, and then we have C's high of 389.65 to A's low of 390.14, and then today's high of 393.16. For the downside, we have today's low of 380.53, and then fill in the gap from June 24th down to 378.83. It's still a 170-point gap, so it's still rather large. It was 254 points. Then we have the price probe from June 23rd, 378.20, and then nothing to 372.89, which is a daily low. So if we take back that gap and get acceptance below June 23rd's price probe, which is here, you have another void to the downside. Okay, so just like we had a lot to lean on from Friday to the downside, we wiped that all out except the gap. Now you have a lot to lean on the upside. But would I be surprised if we took back a lot of this day tomorrow? Of course not. It's just, look, I'm going to show you on the charts what's going on and how emotional these short-term traders are. So let's go now to the chart. So here's the weekly. Now the monthly's down. I'm still calling the weekly up. We took out last week's high. I know we're firmly back inside last week's range, but for now we're one-time framing up. I'm calling it up. If we take out last week's low at some point this week, well, then that's a different story. It goes right back to balance. But for now, I'm calling it up. Now, I did think we had some room to go to the upside after when we took an A period and stuff. I thought the buy still had a chance to kind of maybe go into the end of the quarter and try to push it up. But when you really think about it, last quarter's low, let's go to March's low, close, 451.64. So does it really matter if we closed it, excuse me, 390 or 380 this quarter? The answer is probably you'd rather close lower. It's a horrible quarter to begin with, so why not push it as low as you can get, so at least when the third quarter starts, it won't look as bad, right? Why take this up to, say, 400? You're still down $50 for the quarter. You might as well close it at 380 or 370. Now, I don't know if they're going to do that, but again, it would probably be better to have the quarter end that much that poorer rather than to try to rally it a little bit. So the weekly though is up, but here's your daily. Let's talk about emotional trading. We had an 8-day balance. We said when we come out of it, it's going to come out with a vengeance. 406.93. We'll round it out. 407. We went down to 362. $45 to the downside in 7 days. Think about this. $45 in 7 days. 2 huge gaps, yet not one trend day down. Not one. Okay? We had a trend day that last, I forgot which day it was when we flushed out late that day. It might have been the 9th. But no trend days besides that. Then what do? We go from 362 to today's high of 393. So we go up $31 in 6 trading days and a time frame. And then we come in $12. It's just total short-term traders that are so fragile. I think that's the best word. More than fickle. They're fragile. At the first sign of trouble, they just run. Down that much, up this much, and then give back 12 today. Now, the volume today, think about it. This kind of day where we're down 2% after being up 1%, 86 million only. We have a $12.5 range, over a $12.5 range, only 86 million. So it's showing you that it's incredible how short-term traders can really, really move this market. So now we're in a 3-day balance. So what are we looking for? Well, if we take out, I think we have GDP and Powell before the opening tomorrow, I believe. If we take out today's low, well, then the daily goes to down, right? It's a 3-day balance. We'll go to down if we take out today's low. If we take out today's low, you're going to go fill the gap most likely and test that price probe. Any acceptance below that price probe, again, there's nothing down to around the 373 level. So that's one scenario. Another scenario is we open up inside the day's range and we consolidate. It was a huge range. Now, I don't think we would just take out yesterday's low and not fill the gap. It would be interesting if that happened, but I wouldn't look for that. So the other scenario would be to open up inside of the day's range, take back some of the single prints, and stay in balance and make it a 4-day balance. The last scenario is we somehow take out today's high. I don't foresee that tomorrow, okay? So I think the two scenarios we would be looking at is open up inside of the balance and chop inside of it, or take out the 3-day balance low and go down on the daily and fill the gap. But again, we have to respect how much. It doesn't matter if they're uneducated traders. It doesn't matter if they're mindless machines. You have to respect them. Because did I expect this market to do what it did from A's high to the day's low? Absolutely not. But I had a good day trading, right? I stayed nimble. I didn't get opinionated saying that's absurd for them to take it down $12. If anything, I missed some shorts. So respect what the short-term traders can do. They are vicious. So anyway, I hope you had a good day trading. Thanks for the likes and subscribing to this YouTube channel. Come check us out at camelbacktrading.org and also on Amazon. Check out Algo the Alligator. Have a great night, and we'll speak prior to the opening tomorrow.